What's going on, guys? It is the Badwolf. All right. This particular video is going to be about tax-free income and non-taxable income. What qualifies? So shout out to this goes to Tina Orem and Kay Bell for putting together fabulous work. And I will be providing some commentary in here. And with that being said, let's take a look at what they put together. All right.
What does the IRS tax? Just about everything. Here's a quick guide to the difference between taxable and non-taxable income, plus a list of types of tax-free income. What type of income is not taxable? The Internal Revenue Code defines taxable income as gross income minus deductions. 1. And gross income, federal law says, means all income from whatever source derived. 2. That's a lot of territory, covering not only earned income, such as wages, but also unearned income from investments. If you operate on a...
Now understand here that when they say gross income, you're still looking at the word income. And as they will not define income separately, we know income means that it's something for profit, corporation, and within their jurisdiction. So anytime you say the word income, they're saying you've already told us that you're for profit, you're in our jurisdiction, and you're taxable. When they try to say, "Oh, you're trying to do tax evasion," no, their words are for that particular event, tax avoidance when done properly, or when properly submitted, or not well, I guess properly argued. I was looking for a better word, but all right, so let's keep going.
A cash-free basis, the value of items you receive as a barter exchange is taxable, too. So are gambling jackpots and prize winnings. The IRS doesn't care how you get your money, specifically saying, income from illegal activities, such as money from dealing illegal drugs, must be included in your income on Schedule 1, Form 1040, Line 8Z, or on Schedule C, Form 1040, if from your self-employment activity. 3.
So they even want
simple tax filing with a $50 flat fee for every scenario. With NerdWallet, register now. For a Nerd transparent, hassle, maximum, get every faster, file up to asterisk guaranteed by call. What income is tax-free income? Here are 14 examples of tax-free income that Uncle Sam's tax collector doesn't get to reel in. 1. Educational assistance from your boss. You can exclude from your income up to $5,250 of qualified employer-provided educational assistance. 2. Adoption help from your employer. If your company helps you cover the cost of adopting a child, that's usually not taxable income. For the 2023 tax year, the tax-free employer-provided adoption assistance is $15,950 per child. In 2024, it's $16,810. The amount you can exclude depends on your modified adjusted gross income. 3. Child support. Child support payments are not taxable income. More, see the rules for claiming someone as a tax dependent. 4. Payments for caring for children. Government payments to foster parents for their care of children officially placed in their homes generally are tax-free income. 5. Workers' compensation. If you get benefits for a workplace-related illness or injury under federal or a state's compensation law, that money is tax exempt. However, if part of your workers' compensation reduces Social Security or railroad retirement benefits you've received, that part may be taxable. Also, if you go back to work on light duties, the salary payments might be taxable. 6. Life insurance proceeds. When these are paid to you because of the death of the insured person, the amount usually is not taxable. There are exceptions. IRS Publication 525 has the details. 7. Some canceled debts.
Okay, hold on. So this is why one of the reasons I made a video on this that you guys want to look into or get whole value or cash insurance. All right, now I'm not promoting it. I'm just making mention of educational material from your favorite non-belligerent, non-combatant. Treaty with the United States from the land of Lovitica, private government, micronation, yada yada. When you get a cash value life insurance, it is tax exempt. It is like being able to put money up in the system. They hold it for you. It's paid out tax exempt. You can borrow against it. So instead of putting your money somewhere and getting a little punk return from the bank or whatever else, get yourself a cash value life insurance. You can put it in there, you can loan against it, you can borrow from yourself. All right. And I think that's after what, 3 years or something like that, or 4. And it's going to build cash value, which means that you can pull it out. You're going to get more. It's going to take care of you if anything happens. It's the way to go. You guys may not understand or appreciate the true value of what I'm giving here and in some videos. If not, just contact a friend or somebody else who sells insurance and ask them about cash value life insurance. Or just look it up. I think I already made a video on it. Yeah, I think I made 1 or 2. Yeah, it's the way to go. Okay, let's get back over there.
Debts. If a lender cancels debt you owe, you may be able to exclude it from your gross income if the debt was canceled in a bankruptcy case, was canceled when you're insolvent, was qualified farm debt, was debt associated with a qualified real property business, was intended as a gift or was for your home. There are exceptions and details to understand, so be sure to see IRS Publication 525. 8. Energy conservation subsidies. You upgraded your home's air conditioning system and got a rebate from your electric service provider as a reward for your energy-saving efforts. That financial thank you, either as a direct or indirect subsidy for the purchase or installation of a home energy conservation measure, is generally tax-free income. 9. Municipal bond earnings. Interest you earn on state and local government bonds generally is not taxable. Even better, if you buy municipal bonds issued by the state in which you live, the interest usually isn't taxable at the state level either. Learn how to get started buying bonds. 10. Gifts. Financial gifts, either money or other assets, that you receive are not taxable.
Okay, why are we not working here? Sorry about the delay.
Inheritance. There is no federal inheritance tax, so everything your older relative left you shouldn't pose any immediate tax issues. However, if they left you an asset that produces income, such as a dividend-paying stock, then you may owe tax on the money the bequest earns. See which states have inheritance taxes. 12. Accelerated death.